Welcome to TradeTheMBI.com. This is John. This report is for the 30th of May. And, well, as many of you may know, our website was attacked again. These guys really are just want to find the code to the indicators net, but I do not keep it on the website. And I think it really just bends them out of shape. So I've been spending some time removing malicious HTML code. And, as many times as we have all the protections that you can get, it's one of those things where if they're good, they can just get through it. And I don't know why they keep targeting nonsense, but okay, undaunted by it. We're just going to keep moving on, and it's an opportunity for, since I'll be putting this on YouTube, for everyone to get a chance to look at a nightly report and see what we've got going on. Well, it's been an interesting couple of days. I mean, we ended up with our orange dot buy signal with our target up there. We hit that target intraday the very next day, which was the day after the holiday on Tuesday. Then we ended up with a red dot short, which called for a dip. Well, we were at least looking for two items because it's a little hard to see in there, but this little red line represents a positive extreme, and we know with the positive extremes, we expect at least the low to be retraced. So we were looking for, at a minimum, a dip down to the 50 range, and maximum range, you can see at the bottom, the down target was 1640. Let's see what the low was. Yeah, 1640. What a surprise. No, not really, but to some people it's a shock, and then it reverses, and they don't understand, and they look for this, that, and the other Fibonacci. And this is what I'll get a lot from people, is they'll change time frames to find a Fibonacci that works with it. And you'll find that when I show you a chart, I'm typically looking at 15-minute, 78-minute daily, and that's it. Because if you start going into multiple time frames, you start skewing your data, and it just becomes curve fitting. From a practical read of our shakeout indicator, and that we had the improvement on the shakeout reading, so this isn't horrifying by any stretch. Sure, we flipped back to a sell cross on the power mo, but we know we're overbought, and we're just going to likely chop around here. And that was kind of the suggestion that we had previously as to what we expected for this market in between here, where it would look like there was going to be some fade, and still the projection was that we would have potential of a 1 to 2% move higher overall. So short dot gets hit, we move right back to pretty much the exact same spot we were, so nothing too dramatic. What is interesting though is shorts piled into the setup. I mean, we can see from up down power we're down to 15, 247. The problem for them there is you have to have the bulls move to the negative side to carry this lower, and that's just not happening. Another pivot back up for the bull side of it, and boom, short cover, and we're going to get the same pop going back up. So it's something that they're going to have to commit to a lot stronger and see a lot more bulls pull out of the market, and that just hasn't happened as of yet. The purple line, that happens to be a 13 EMA. A lot of people look at that for institutional guys, tend to want to buy around that. But the thing about these EMAs, and some people say, oh, well, it's supported right on there. Well, it didn't on these days. It moved below, popped back above. If you've got an EMA as a support in that, the idea for a professional is to go past that, to improve their liquidity, either to continue a short move or to look to buy up shares. In this case, I think they're breaking some of these supports to buy shares. Some people look to the midline of the Bollinger Band that was support. They're relative. They just have different people who would be interested in buying at that particular point. It doesn't indicate to you that they're going to buy. That's where we need the algorithms and the bifractals to give us those setups. Nothing conspicuous. Still have 1666 upside. The computer had 1637 for downside, so it was a little high on that. MACD buyers, they're out of it with their sell signal, and dip below here from our price oscillator below the magenta line would be nice if it corresponded with a deep pivot in the momentum, and we could get a 2020. And people say, well, what's a 2020? Well, it's actually a 2424 if you look at the magenta line right here. But when these two come up together, you tend to get nice momentum rises. So we looked at that as an answer. This looks busy, my goodness. The reason we have so much going on here is with the colors of the extreme. What we talked about the other day, when gap fill didn't come in, we pointed out that we had dipped below the red line here on the extreme. That meant these lows had to be retested. It was very consistent with what we were looking at from the daily standpoint, so there was no shock with any of that. And sure enough, boom, a lot of other people would just say, oh, well, you filled your gap, and well, yeah, that's fine, okay, but we did retest the same levels right there, and we did so on higher extreme at this particular point midday, and that was the nice rally point that came off it. It's popular setup right there. USO, we were looking for a little bit further to the upside before we were going to sell a call. Now you'll know that even with the website not up at this point, we own a long 35 put and bought shares right at 33.10, and my suggestion to you would be to be out at 33.20 to collect that gain and let the put ride. And again, if we move back above that 33.20 now, you would want to be long that setup. So it works out perfectly. Interesting pivot right here from the long side, but we didn't get the dip below, and this is something I always tell people to look for, particularly when it came to Facebook, and that when you get the dip inside of it, you get your little bounce like we had back here where we dipped with the, it doesn't matter if it's orange or yellow, moving below the white. That's where you're going to get your resounding move, and it didn't happen in this particular case. It stayed inside, so likely to bounce around. The fact that we're retesting the lows, which was expected, given that we had dipped below the red line, fine. What it needs to maintain, though, will be testing of those lows without dipping back below the red line. And so that's going to be the key for USO. Near term, gold, we've been singing the praises of gold because we've been watching this rising shakeout here, and we keep talking about it. Yeah, you've been approaching the same lows. Everyone thinks it's a disaster, but we've seen accumulation every time we get to this particular point, and so it's very interesting. It's holding up. It's in another series buy that's based off of the up and down power, and looking for the pivots there where we can see a little bit more momentum streaking to it. Definitely any weakness at this particular point would be attractive now, because you can see that we've eased all the overbought. We've got near overbought there. I don't think I have the color set up on this one. Let's go over to it and we'll just put it in. So we just go over here, we'll type in true for the color, and voila. There you go. You can see it when it gets below the red line. We're deep magenta, bullish setup there in the green, and then overbought when it goes to the red, and then yellow is very close to near overbought. So it's doing fine as far as that setup goes from an ERH standpoint. No real objections. It's all positive. You don't have a buy signal, interestingly enough. Got a little bit up there as far as I wouldn't call it overbought. It was just kind of in the mid-range. I prefer to have us down lower for our buy setups than at midway. But if we do get a dip in price that corresponds to a buy signal, I will definitely have us in that setup. CLF, now we knew that we were playing, well, some people say we're playing with fire, but we knew exactly what to expect. We had our chaos event, which means we expect price to return back here. We knew we were in a sell signal. Okay, fine. No objections to any of those things, which is why we sold a put that would allow us to get the shares, because we know on a turnaround we're unlikely to be able to time that successfully from a daily standpoint without me giving you an intraday chart, and this will allow us to have those additional shares and then look for the bounce. Pretty deep move below the red line, minus 78 on that differential, so that's pretty extreme. I'm actually going to be changing the name. Instead of it saying differential or diff down there, the third from the bottom, I'm going to have it say extreme, so that you'll know that that's the extreme histogram rating, make it a little easier to identify. X, likewise, same situation. We were looking for exactly the similar type of setup, and we wanted to capture more premium. So this is the reason why when we're talking about selling puts, where I'm like, well, we didn't get enough premium from them, so we were looking for a bit further decline in order to capture some of that premium, and that's exactly what we look for. And that's a bullish setup coming right to the midpoint. We would need to see a reversal begin next day with a higher extreme, or at least maintaining their extreme in between the cyan right here in the red, and that becomes a bullish configuration. We still have the upside fractal target of 1935 for this, so definitely be playing for that one. Likewise, big sell signal with WLT hasn't changed, though finally reaching the zero line. That's what we want to see, getting down there oversold. Likewise, we wanted a big discount for the 1750 puts and to capture some really good premium with it. Nice GAM, so we should expect some more volatility with that, and also right at that midpoint. So a lot of people are going to be terrified of these. Don't. Plus, we're also planning to hold on to them for a while, so it's really not as big a deal as some people want to make out. Looking at some of the others that we've followed since, gosh, forever. Using the ABM, which is a designed adjustable stop that I created, using well, several of the different indicators to give us a baseline. Rises all the way up to 74.41 for a stop now, following this trail on American Express. And you can see when you get into some of this extreme part up here where you just get the little choppy overbought and sold signals, it will allow you to make those adjustments accordingly, and it's stayed right under where prices. It's been just outside the aura of volatility. Now, speaking of this, we talked about how ugly Facebook was going and that we were going to utilize a trailing stop because with this chaos event, we know that, gosh, though, last time I showed the one on Apple, it took almost a month to conclude. And so that's about generally what the expectation I have for the Facebook to take. But the number of days below the red line, that's epic for this. It just keeps growing and keeps moving lower on them. Someone asked me about, determining the trail for buy entry. And in this particular case, what we're doing is we're just trying to stay outside the high because any turnaround move, particularly on a close that ends at the bottom, is going to give us a higher extreme, and that higher extreme will be a very positive for a move back to the upside. Negative 23 on the shakeout, that means there's been some pretty decent distribution. You would need to see several pop-ups, and I would think that the first pop-up is not going to work. It's just going to be what some people would call a dead cat bounce, and then it'll return. We won't know that because some of these can start to reverse and just take off, particularly when you're dealing with an event that's been orchestrated like this. And like I said, what we're looking for will be either the orange or yellow to dip below the expanded ratio histogram white, and that just keeps moving further and further down. I don't think in its history, what's the number here? 23 is one of them that had on a dip, and early on another 23. So this is so far the lowest reading for its ERH white. What was the last dip here? 28. Oh, okay, so 28. That was finally your capitulation move. So that's what we'll be looking for, somewhere in that range. It's going to flatten out and start to come up. It's the second wave that I think is always the most interesting because it's usually the point where most people then are convinced a stock is going to decline, and that's when the players have added into it and they fool, and boom, it spikes from there. HLF right at the stop out was at 46.34. Yeah, so it took it out for today. For me, I prefer the close below, but certainly nothing wrong with taking it if it touches it, because you can use the ABM as a straddle to be out below the cyan and then utilizing your red and magenta as opportunities, where if they've dipped below and they come back as buys, if you don't see any fractals. And you can see there's been a consistent sell signal going through there, but it's held up nicely. We were just looking for the positive extremes here to retest after we had the red dot shorts that met their targets without any trouble at all. Nothing special with that. BBRY again. 1455 is the number that I have trading this to the upside, and just consistently is putting this range in with the chaos events. And this close, what was it, 1446. So not surprising, went a little bit above it. That's why we tried to just stay out a little bit above where that would be, this kind of a small mover. Still dipping below the red line. What I would like to see a little more of a capitulation, and then, the best situation is to have a higher extreme on a lower close. Those are the really nice ones where they've really fooled everyone and they've been acquiring into the decline. That always gets them, but you gotta have the supply to do that, and it doesn't always occur. Sometimes you have to force these moves to create liquidity, and that's exactly what these professionals are designed to do. And sometimes they get the ball rolling and it goes too far and then they have trouble stopping it, and that's always interesting when that happens, because that's usually when you get your cascade effects, and some people call it your mini crashes and stuff, but it's not really that dramatic. If we look at our MBI Opus, well, what we want to do, we know we had closed out previously, but on the close, the other day, it gave also a buy signal. I didn't want to buy it that because we had the red dot short, but now that the red dot short really satisfied its target, I want to be a buyer at 1647 or above. So that's actually going to be at a discount to the Starhawk buy setup. And for those that wonder, we can always take a look at the performance report to see how we're doing. Since 2005, there you go, 4.14, 82%. There's our equity curve, and for the year on 10 contracts, just trading this way. So not bad. Now, for those that are a little more active and have the indicators, you're trading the Power Mo 2 Opus 2, and the 50K bought a little upside down on that, and the 50K doing excellent for the start of the year. 5.38 profit, so slightly lower than it was before. We were at 5.4. That's the overall equity curve, and 67% win rate going all the way back into September of last year. No real issue with that. The 25K also bought. It's in for full 20 contracts. Bought the first one back there. Second one just a fraction lower. So it became attractive on there. I know some people were like, "Oh, we missed the big one." Those things are going to happen. But the signal came through this particular point, so we'll ride that one as well. So all good from those aspects. So intraday, nothing too spectacular. It's just kind of boom, boom, boom. We got plenty of nice buy signals. That's a whole another one. I don't want to go too long. Anyway, I hope to have the website up as soon as I do. You will all be the first to know. As always, though, look for me on StockTwits and trade well.